As traders, we often look at the markets and work out the direction of travel. And at the moment, at least, we have a number of issues that are affecting that direction. We've got interest rates, concerns about whether or not the Fed's done, and whether or not the European Central Bank, Bank of England, have any more upside to go. There's a big debt pile just shadowing the markets. And of course, there's the geopolitical aspects as well. So as traders, how do we go about working out where the markets are going? Well, let's talk now to an experienced trader, someone that IG's spoken to a number of times before here in the studio, Rajan Dhall from DND Capital. Welcome.
Thank you for having me.
It's great to be able to catch up with you again. When you contacted me, I thought, what a brilliant opportunity here to talk about some of the basics about trading. First of all, what are your views on markets at the moment from us, from a trader's point of view?
Yeah, I think we've been really trying to watch the Fed very closely and other central banks and just really trying to work out the probability of whether they're done. At the last meeting, you know, we've seen a lot of central banks go on hold, even the Bank of England, and we're really trying to work out how that's affecting equity markets and obviously the interest rate curves and things like that. So we've been looking to see, we've been trading this kind of tech bull run at the moment. So I've got some charts here to show you about that and how we can take advantage of that too.
First of all, before I get into that, what's your client base?
Yeah.
Who are you working with at the moment? What's the message you're giving them?
Cool, yeah. So we're obviously DND Capital. We've got about 20 traders on our books. We're all prop traders, and we're funded by an asset manager in the States. And we trade together in a live trading room virtually. We meet up once a month, and we all kind of trade together. So we're all like in a little trading group, a tight knit group, where we're just talking about the markets every day and trying to take a position with a good amount of risk on the markets. That's literally what we do every single day.
So you see, you got 4 charts for us. I know you want to start first of all with the Nasdaq, don't you?
Yes, correct.
This is a stock market with a ton of companies on it, so it's quite a good, well spread index. But that being said, you know, looking at some of the fundamentals here, it's a very narrow band of stocks that have been doing a lot of the upside.
It is, yeah. I mean, if we look at companies like Microsoft or something like that, we've seen them kind of edging towards the recent highs, the all-time highs on their charts, the most recent highs. So, you know, if we're looking at the way that this chart looks at the moment, this one I posted on my social media, and we've got a really nice breakout. And generally with technical breakouts, we come and generally get a test as well. So once we broke out of this trend line, we came and had this test. You can see this yellow candle. And then as soon as we broke the top of that candle, we all kind of really felt that this move was going to take momentum. We got a massive gap to the upside as well. And then even yesterday, for example, that was a negative candle yesterday. But at the beginning of the session, we saw a lot of the stocks rise. So we're intraday traders, day traders. So we've been taking a lot of advantage of these moves in intraday markets, but just the general trend for us is still on the upside, and you can see we're edging towards this kind of target here, this resistance zone. So we want to see if we get a breakout of that resistance zone too.
Yeah. How do you deal with questions about how far up do we go? I mean, assuming we get a positive close beyond that, I think that would then take us to 10-month highs, wouldn't it?
Correct.
I think if we got a break on that candle there, you've got at the start of that descending what is now a support line.
Yeah, I love this question, right? Because really, you know, we're not Mystic Meg, right? So the answer is actually we don't know, and I'm very comfortable with the fact of having that answer. If, for example, we see enough bullishness, like if, for example, we get clear indication from the Fed that, you know, we're at the end now, where inflation levels are dropping, and, you know, everybody thinks that the Fed's done, then I really truly believe we can see a break of this level. So it depends on our outside macro factors, but this chart is a very bullish chart, and until the chart tells me otherwise, I'm going to remain in with a bullish view.
Yeah, what's the oscillator at the bottom? Just talk us through what you've got on there.
Yeah, so we've got a MACD here. So there's 3 things that I generally use for bias, right? So really to take my view and direction. So I've got these 2 SMAs here, which are the 21 and the 50 SMA. If price is above that, I'm generally bullish, but also I need to be making higher highs, higher lows on the chart, and you can see that we broke the previous wave high here. And then lastly, I'll use the MACD as well if the histograms are above the 0 line, and if on this we are blue above yellow, then that will also give me a bullish indication on my lower time frames.
Yeah. Just moving away from the charts, just quickly talking a little bit more about some of the risk management management. How do you go about that? What do you say to clients about how you make sure you don't get caught the wrong side of a trade and you get stopped out rather than take a loss?
Yeah, so I look after 20 traders, which you can imagine is a bit of a difficult job, especially there's 6 of them that are, you know, funded significantly. So what we generally do is we have a maximum daily drawdown on our funds, right? So if, for example, because we're day traders, if we're taking 2 or 3 positions a day, I only take 1 position every single day.
Right. Do you have positions open overnight?
No.
No, you don't.
We don't. No, we're purely day traders. We can do, but just how we like to trade, really.
You want to get a good night's sleep.
Exactly. Not only that. I mean, I've been a swing trader for a very long time. Just the way that our company is structured and how it works now. We just moved over to day trading because it just works for the way we're working. But yeah, like basically, we have a maximum risk capital allowance per day on each trader does on every account. I have it on my account as well. You know, I make sure that I don't lose more than $5,000 a day, for example, and you know, if I'm anywhere near there, that's when I'll look to cut risk. But really, it depends on the individual trades. So, like for example, let's say a stock like maybe the next one I'm going to show you has a 2% average move a day. I'll make sure that my risk is within that 2% average move or something like that. So yeah, this one here is AMD. So this is partly why the Nasdaq has been rising. I mean, I spoke to you guys just a minute ago about, let's say, for example, Nvidia. It's been a stock we've been trading a lot. That's been absolutely bullish. Microsoft's been absolutely bullish. Netflix has been moving higher. This is one I wanted to talk about today because it's on my radar, because it's not as bullish as them, but we've had a really strong bullish breakout, right? So again, if you're looking at what we discussed with the Nasdaq, I didn't draw the trend line, but we've had a really nice trend line break here, and then the market's moved above my moving averages again, and then again we've got this really nice resistance zone target as well. MACD is obviously bullish too. So really, every time we get a break above the previous candle high, or every time we're getting a bullish move in this stock, my view on this stock is going to be bullish, and I'll be taking intraday positions based on that, as long as we're in this environment, as long as the market stays within this environment. So that's kind of how I'll position myself. They're very general technicals, you know, this isn't hard. It's not, you know, it's not something that anybody at home can't do. We're really looking at that resistance level as our next target. And then as soon as it broke the previous wave high here of 107.80, that's when our view turns bullish, because we're above the moving averages, we're above on the MACD, and then we've also got a clear target. So now I can really be looking at smaller intraday positions up until that target. That's the plan.
What would you need to see on this chart to turn you bearish on this?
Yeah,
How far down?
Yeah, so the rules are the opposite, right? So so basically, if we're making lower highs, lower lows, so if we're coming into a test of this support area, if the MACD then crosses blue below yellow, and then we're edging towards these moving averages, or we break these moving averages, I wouldn't be touching it. You know, there are a fair few stocks that are like that, you know, that we are seeing at the moment. But you know, it just happens that in the tech sector, in the Nasdaq, we've got the most amount of bullish stocks.
Yeah. We said at the top, one of the headwinds, or one of the things we've got to consider, is direction of interest rates.
Correct.
How do you go about measuring that? What are your trades around the interest rate picture?
Yeah, so we look at, you know, the CME probability rates of the futures funding rates. So we do look at them quite a lot. But I also take my own view, because I don't really think inflation is calculated correctly a lot of the time. So, you know, generally, if we're looking at average prices of cost increases, I think the general public will actually know it's gone far further than these percentages that they're figuring out. So basically, just by actually being around, by looking at petrol prices, gas prices, forward prices on both of those as well, we can work out, and also the agriculturals, so you know, we could look at corn, wheat, etc. So we'll do these charts exactly on all of those asset classes, and then we'll see when we think that they're kind of like starting to turn over. We've seen a dip in oil, haven't we, recently? So things like that, they make me look about 2 or 3 months forward to think, okay, well, where will inflation be in that particular time? Because it's a lagging indicator. The ones that they give us, the data they give us, is lagging. So then we just try and work that out ourselves, and then we add that to the futures probability rates, and that's what makes me think I do really feel like the Fed's done at the moment. I do think so, unless there is a surprise upside in inflation that maybe we haven't figured in, like maybe the cost of housing or something like that. But
so how do you chart that?
So yeah, across that. So let me just show you another chart that I've got on here. So this is the 2-year versus the 10-year. So this is the US interest rates. So what I do is I generally look at the spread between the two of them, and you could see when equities were really having a wobble, I've got this question here. Look how wide it was between the 2 and the 10-year. Short-term interest rates were a lot higher than the longer 10-year and even the 30-year. But you can see just slowly they converged and they started to catch up. And now we've actually even had a cross a couple of times, and you can see that they've both been falling. That's what I feel like is good for the stock market there, because hedge funds, investment banks and stuff like that, have they allocated as much of their portfolio over to interest rates? Has that shift finished? When is that going to be stuck? Because we're looking at 2 10-year maturities for those rates. And the other thing that we want to remember is that Apple, Google, Microsoft, they have very large cash reserves. They're going to be receiving 5% interest on these cash reserves now, which is obviously a little bit bullish for their stocks too. So they're another things that they're the kind of things that are going through my mind about where the kind of global positioning is at the moment.
MACD pointing down on this chart.
Correct.
Explain how you read the MACD when you've got a spread like this. What's that telling you? Just that rates are going down?
Well, perfect, yeah, because basically, like we spoke about the Nasdaq and we spoke about the other stock AMD earlier, this is actually doing the reverse now, and this is what tells me that. So we got a push back in towards those moving averages, right, first of all. We're then looking to see if we can break a lower high, lower low. We've currently made a lower low wave, but we need a lower high, lower low wave. And then the signal lines have come back in towards the MACD histograms, and the histograms have been below zero because of the MACD cross there anyway. I don't really look at divergence, yeah, if I'm honest. I generally look at the trend more than I look at the divergence, but you can see that, like, for a short term, medium term, this is a lot more bearish than the markets that we've seen just previously in those stocks. So that's how I kind of gauge the difference between the two of them and how they're working together. Yeah.
And of course, if you were to overlay perhaps maybe a dollar basket chart on that, you'd see that pointing down as well. So there's less appeal to holding dollars.
Yeah, correct. I think the ECB and the Fed, they've got different ideas at the moment, right? So the ECB, the last thing that I heard from them is that they haven't seen the actual point of their interest rate rises. They haven't seen the consequences of those interest rate rises. That's the last thing I've generally heard from them. Whereas the Fed have had a bit of a different story, So if you're comparing those two stories together, 60% of the dollar basket is euro dollar, as we know. So then that's why, we might have seen that roll over in the dollar index.
And of course, why I wanted to talk about the dollar was because the contrarian trade to that is gold.
Yes.
And gold benefits. Any dollar-denominated commodity will benefit from a drop in the price of
Correct. And again, I really do let the chart tell me the story. I think gold is a really tricky one, because I think I used to write for Kitco, and a lot of people, you were waiting for that gold inflation trade. Do you remember? And I was sitting there thinking, well, there's actually a viable alternative to gold because interest rates are rising and it's fixed. So gold is still a speculative asset in the sense that you don't get a guaranteed return from it. But from a 2-year or a 10-year treasury, you get a guaranteed return from it, and it's a safe haven. So if you're playing the safe havens against each other, I think the fixed income wins, right? So this is why we're seeing gold not act the same way. It's in the middle of those moving averages. This MACD is a little bit choppy, and what I've said here, for those of you who don't know what this is on the right hand side, it's a volume profile indicator. So we're stuck in the middle of the volume point of control, the main bulk of volume on gold futures. We're in the middle of the volume area for that. Unless we see a breakout of that and a new higher high wave, so I've said here, unless I see a breakout of $2,000 an ounce, I'm not really 100% sure that this is bullish. That looks like a sideways market to me, in and out of the moving averages, in and out of the moving averages. I'm not 100% sure that that's a very bullish chart.
Just tell me, keeping the chart up, tell me that last little bump there.
Correct.
It did go over 2,000. We saw a candle close beyond that. I think we saw a few candles where we're all trading above.
Correct.
The 2,000 mark.
Yeah.
Why weren't you bullish then, or were you bullish then, and did you get caught out?
No, 100% we would have been bullish then. Yeah, because that would have followed our rules, and we would have been bullish then, and we would have been caught out on a swing position with something like this. And I think maybe 1 or 2 of our traders were caught out on a bullish position like this. But that happens, It's fine to have like a 50-60% win rate as long as your risk to reward is higher. I think a lot of traders do need to know that. Don't beat yourself up if you get a loss, as long as you're following all your rules. That's fine. I would never hold that against one of my traders at all.
Just looking at this distribution on the right-hand side here, the VPOC as you've got here, this is actually one of the first charts I think we've got where the price action is actually on the peak.
Correct.
If we go back to something like the Nasdaq, where you had we are above the peak of the distribution there.
Correct.
What does that tell you? Because surely that would then draw the price action back down to the peak on the right-hand side of the volume?
Yeah, I mean, this argument is an interesting one, because let's say, for example, we look at the previous peak here, and when it came into test, what I generally look at is how the test happens with the peak and the volume of the breakout after that test, right? Okay. So let's say, for example, we've got this peak here, which was at 320 on the QQQ. The price broke out of it. We got a really firm test, and when it breaks that high there, that's when we know we're really bullish. So I'll be looking for something similar here. If this market comes back to test a peak of the VPOC, then when it tests it, I'll be looking at the volume to see if the test on the break for the next move up is going to be a high volume. And then if it is on high volume, we'll remain bullish. But we will still constantly remain bullish in general if those three conditions are met. If we've made a new higher high wave, which we have, if we're above the SMAs, and then the MACD is blue above yellow. So we'll still remain bullish.
Yeah. No, it's interesting. Thanks indeed for dropping by.
No worries. Thank you, Jeremy.
Looking forward perhaps maybe to catch up with you again some other time.
Brilliant.
That's Raj Dhall. He's the director and founder of DND Capital. And joining us now, taking a look at some of the charts in what is an extraordinary time for us traders in the markets.